In the dynamic world of finance, innovation and adaptation are key components to staying ahead of the curve. BlackRock, a global leader in investment management, has recently announced a strategic move to expand the investment universe for two swap-based commodity exchange-traded funds, ETFs. The $1.4 billion iShares Bloomberg Enhanced Roll Yield Commodity Swap UCITS ETF, ROLL, and the $1.9 billion iShares Diversified Commodity Swap UCITS ETF, ICOM, are set to benefit from this expansion, aimed at minimizing tracking difference versus their benchmarks. This article delves into the intricacies of this development, exploring the reasons behind BlackRock's decision and its potential impact on the ETF landscape. Understanding swap-based commodity ETFs. Before delving into the expansion of the investment universe, it is crucial to understand the fundamentals of swap-based commodity ETFs. Unlike physically backed ETFs that hold the underlying assets, swap-based ETFs utilize derivative instruments such as total return swaps to gain exposure to the performance of a specific index or commodity. This approach offers flexibility and efficiency, allowing investors to access the commodities market without the logistical challenges associated with physical possession. BlackRock's commitment to minimizing tracking difference. Tracking difference refers to the divergence between an ETF's performance and its benchmark index. It is a metric that investors closely monitor as it reflects the fund's ability to replicate the index's returns. BlackRock's commitment to minimizing tracking difference highlights its dedication to providing investors with a more accurate representation of the targeted market. The iShares Bloomberg Enhanced Roll Yield Commodity Swap UCITS ETF, ROLL, and the iShares Diversified Commodity Swap UCITS ETF, ICOM, are at the center of this strategic move. These funds, boasting significant assets under management, have become prominent players in the commodity ETF space. By expanding the investment universe through unfunded total return swaps, BlackRock aims to enhance the precision with which ROLL and ICOM track their respective benchmarks. Unpacking the expansion, unfunded total return swaps. The key mechanism behind BlackRock's expansion strategy is the use of unfunded total return swaps. Unfunded swaps are financial agreements in which one party agrees to pay the other party based on the total return of a specified asset or index without the exchange of any initial cash. This approach allows BlackRock to efficiently manage exposure to commodities while minimizing the impact on the fund's cash holdings. The decision to incorporate unfunded total return swaps into ROLL and ICOM's investment universe signals a nuanced approach to risk management. BlackRock aims to strike a balance between optimizing returns and mitigating potential risks associated with the commodity market's inherent volatility. Examining ROLL and ICOM investment objectives and benchmarks. To fully appreciate the significance of BlackRock's expansion strategy, a closer look at ROLL and ICOM's investment objectives and benchmarks is warranted. iShares Bloomberg Enhanced Roll Yield Commodity Swap UCITS ETF, ROLL. Investment objective: ROLL seeks to track the Bloomberg ROLL Select Commodity Total Return Index, providing exposure to a diversified basket of commodities. Benchmark: Bloomberg ROLL Select Commodity Total Return Index. iShares Diversified Commodity Swap UCITS ETF, ICOM. Investment objective: ICOM aims to replicate the performance of the Bloomberg Commodity Index by utilizing total return swaps. Benchmark: Bloomberg Commodity Index. These benchmarks serve as the yardstick against which the performance of ROLL and ICOM is measured. BlackRock's move to expand the investment universe aims to align the funds more closely with these benchmarks, ultimately delivering a more accurate reflection of the targeted market. Analyzing the benefits of the expansion. BlackRock's decision to broaden the investment universe for ROLL and ICOM carries several potential benefits for investors and the ETF landscape as a whole. Minimizing tracking difference. By incorporating unfunded total return swaps, BlackRock aims to minimize tracking difference, providing investors with a more accurate representation of the fund's performance relative to their benchmarks. Enhanced efficiency. Unfunded swaps contribute to the efficiency of the funds by allowing for greater flexibility in managing exposure to commodities without significantly impacting cash holdings. Risk management. The use of unfunded total return swaps reflects a thoughtful approach to risk management. BlackRock seeks to navigate the inherent volatility of commodity markets while optimizing returns for investors. Competitive advantage. As one of the largest asset managers globally, BlackRock's strategic moves often set the tone for industry trends. The expansion of the investment universe for ROLL and ICOM reinforces BlackRock's commitment to innovation and adaptability, potentially giving these ETFs a competitive edge. Challenges and considerations. While the benefits of BlackRock's expansion strategy are evident, it is crucial to acknowledge potential challenges and considerations associated with the use of unfunded total return swaps in commodity ETFs. Counterparty risk. Engaging in total return swaps involves counterparty risk, as these agreements rely on the financial stability of the swap provider. BlackRock must carefully select and monitor counterparties to mitigate this risk. Regulatory scrutiny. The use of derivatives in ETFs often attracts regulatory scrutiny. BlackRock must navigate regulatory requirements to ensure compliance and transparency in its expanded investment strategy. Market volatility. The commodity market is known for its volatility. While the expansion aims to enhance risk management, market fluctuations can still impact the performance of ROLL and ICOM. Investor education. As with any innovative strategy, investor education is crucial. BlackRock must communicate the rationale behind the expansion and the associated benefits to ensure investor confidence. Conclusion. BlackRock's decision to expand the investment universe for the iShares Bloomberg Enhanced Roll Yield Commodity Swap UCITS ETF, ROLL, and the iShares Diversified Commodity Swap UCITS ETF, ICOM, reflects the company's commitment to innovation and precision in the evolving landscape of ETFs. By incorporating unfunded total return swaps, BlackRock aims to minimize tracking difference, enhance efficiency, and manage risks associated with commodity market volatility. As investors continue to seek exposure to commodities within the ETF framework, BlackRock's strategic move sets a precedent for other asset managers. The success of this expansion will likely be closely monitored by industry participants, regulators, and investors alike. In an era where adaptability is key to success, BlackRock's proactive approach reaffirms its position as a trailblazer in the investment management space.